June, and below market forecast of 8.7%. Inflation is a general increase in prices and fall in the purchasing value of money. Energy Consumer Price Index CPI rose by 32.9% from hitting a 42-year high of 41.6% in June, mainly due to a drop in gasoline cost, fuel oil, and natural gas, while electricity prices accelerated to 15.2%, the most since February 2006. Costs also dropped for new vehicles and airline fares. On the other hand, inflation continued to march higher for food at 10.9%, the largest increase since May of 1979. Shelter, used cars, and trucks rose. Compared to the previous month, the CPI was unchanged after hitting a 17-year high of 1.3% and also below forecast of 0.2%. Core inflation was steady at 5.9%, beating expectations of 6.1% and offering some support that inflation has finally peaked. The question is, has inflation peaked? Because in recent times, the value or the worth or the cost or rate of inflation has always been on the high side. For the first time in many months, the US inflation dropped. Has inflation peaked? Are we going to see a new direction in the global economy? Talking about global economy, one element driving the global economy is the oil. Oil prices rose to above $92 today. WTI crude futures were trading around $92 per barrel, and the Nigerian price benchmark Brent crude traded around the $98 per barrel mark as investors balanced a somehow bullish report from the International Energy Agency (IEA). And this was against a larger than expected increase in the US stockpile and the resumption of oil flows on the Russia to Europe Druzhba pipeline. US inflation rate is affecting all the markets at the moment. The International Energy Agency has raised its oil demand estimate for 2022, saying higher natural gas and electricity prices will lead to more gas and to oil switching. At the same time, the agency sees a near 20% drop in Russia's oil output by the start of next year when the EU ban takes effect. And on the flip side, EIA data showed that US crude stockpile expanded by 5.5 million barrels per week. Talking about last week, much higher it was than the 73,000 barrel increase expected by analysts. On the top of that, US gasoline demand remains 6% down over the past 4 weeks compared to last year, and meanwhile, flows on the Russia to Europe Druzhba pipeline resumed earlier this week, easing supply concerns. Well, it's good news that there are improved supplies of gas from Russia to Europe, and that could affect the oil market reasonably. Talking about the different markets, we'll move straight to copper market, or the metal market as you may like to call it. Copper hits 6-week high above $3.65 per pound on tight supply. It was a third most widely used metal. Talking about copper in the world, is the third most widely used metal in the world. Chile accounts for over 1/3 of world's copper production, followed by China, Peru, United States, Australia, Indonesia, Zambia, Canada, and Poland. The biggest importers of copper are China, Japan, India, South Korea, and Germany. Copper futures rose above $3.65 per pound today, hitting the highest level in about 6 weeks, lifted by tight inventories across base metals and lower than expected US inflation numbers for July. Inflation on top of it today. Copper stockpiles in warehouses tracked by the Shanghai Futures Exchange were at their lowest since January 21st, while London Metal Exchange inventories of the commodity fell to their lowest since June 29th and down 30% since May, as reported by the media. Meanwhile, US consumer price growth slowed to 8.5% in July 2022 from 9.1% in June, amid a significant drop in gasoline prices, raising speculation for a less aggressive Federal Reserve tightening. However, The US Central Bank officials pushed back against such expectations and reiterated their commitment to keep raising interest rates until they see compelling evidence that inflation's sustainability is abated. Let's have a quick look at the metal market. It's the London market today, and the metal market is exercising its muscles against each other. Prices are going up and going down, and some are relatively stable, not very volatile. On the market outlook today, the metal market begins with gold. Gold has a reasonable drop in this early morning at 0.76 points off the 0. Market, while silver is on a drop also at a negative, not quite much, but 0.021 level points and 0.10%. Copper seems to find itself on an increase. Current price at $3.6899, an increase of 0.0344 points and 0.94% drop. And the rest of the market, talking about steel, iron ore, lithium, platinum, titanium, and steel, seem to be relatively upward. Well, at this point, we'll go on a short break. When we return, market continues. Thank you for staying tuned. I did say when we return, we'll be looking at the market, and it's the Nigerian stock market report. Well, Dangote Cement, May and Baker propel Nigeria's capital markets to 390.9 billion naira in gain. The Nigerian capital market was lifted by the 1.46% rise in equity capitalization at the close of trading on Wednesday, settling the pace for today's trading. After 8 hours of trading on the floor of the capital market, the market capitalization rose by 390.91 billion naira from 26.61 trillion naira to 27 billion naira. Also, the all-share index rose by 724.76 basis points to close at 50,075.47 points, up from 49,350.71 posted on Tuesday. Investors traded 279.22 million shares worth 2.08 billion naira in 3,576 deals. And Dangote Cement led the gainers with 24 naira to rise from 241 naira to 265 naira per share. WAPCO topped the losers chart after shedding 2 naira 25 kobo to drop from 25 naira to 25 naira 45 kobo to 23 naira 20 kobo per share, while Jazz Bank led the day's trading volume with 115.12 million shares valued at 100.14 million naira. Well, this is how far we can go in today's business sector of Business 360 until we come your way tomorrow. Don't go anywhere. News at 12 continues next.